Hi guys, thanks for tuning in to an episode of Nuggets News. We're back with our weekly crypto news update with Michael, who's head of written research over on the platform, and we're going to be getting into a lot of Bitcoin related stuff today. And the market's finally had a decent bounce, and funnily enough, this was exactly what we spoke about, wasn't it? Low 80s, a bit of a wick to really scare everyone about that cycle top, and most of our data is still pretty bullish, so we're hoping that it resumes upwards next year.
Tell you what, it's so nice to sleep at night not being levered, like I had done in previous cycles, and just being able to let happen and let it wash over you. Because I was same as you, like not stressed, like oh here we go, this is just a normal shakeout, and we did get the bounce. But what happens from here is the next question.
Yeah, and every week for the past few months was telling people take profits into the group. I think I posted and said, guys, in case I haven't been crystal clear, make sure you're taking profits. And that was when we're still over 110,000. And now it's probably a good time to redeploy. Like Philip was saying, all that data's still looking pretty green. And some of those alts like sold pull back nearly 50%. So even if you just took a little bit of profits, you've increased your bags on all that stuff. So all the strategies are still working really well.
Big time. We look at sort of the chart and what we've actually got going on with it, most things here. Like we got that bounce is pretty consistent across the board now. I actually spoke to a market maker. I've just gotten back from South America. I went to DevCon in Argentina and spoke to a market maker and said it's actually interesting why all of the alts are reflexive so much to Bitcoin. And a lot of it actually goes down to being paired against Bitcoin, paired against ETH in DEXs. And I'd never really thought like, okay, why does everything bounce when certain coins bounce? And it's because a lot of their pairings are like their liquidity for each other. And so when the liquidity pairing of ETH moves, it pulls everything that's got a sort of a DEX pairing against it. And this happens quite across exchanges as well. So I thought that was an interesting little note that everything literally is price anchored to Bitcoin and ETH to some degree.
Yeah, I mean, I've spoken about that a lot in previous cycles because everything used to be paired to Bitcoin more than Tether, but now you probably argue there's more Tether pairs. But I think the
For sure.
liquidity's got thinner across all the markets and the market makers that are doing all this. So it's kind of a similar play. That correlation's tight, but for slightly different reasons. But yeah, absolutely, it's happening.
Well, you had a banger this last week. It kind of spooked me a little bit, I'm not going to lie. But yeah, this was a good one from you.
Yeah, and this is something I've been talking about a bit in the VIP calls we've been doing, and with you guys in the research chat. I think there's more and more evidence coming out for these connections to possibly the intelligence agencies, Epstein, child trafficking. How much of this was all being funded in Bitcoin news? So yeah, I don't think we've seen the end of this. And now the big question is, well, how much is this going to matter? What's the time frame for this to become widely accepted or public knowledge? Doesn't matter now that it's also BlackRock and ETF driven, the price action. But yeah, that was a fascinating chat with 7Cs, and he bought all the receipts and showed all the connection. He's a fantastic researcher.
We were just saying off camera, like I've always kind of had the theory that Hal Finney is probably Satoshi because he's already passed. That's why the wallet's never been touched. But the other, obvious one is this just the NSA or the CIA that done this? If you chuck in Satoshi Nakamoto into Google Translate, like a literal translation is central intelligence or center intelligence for Satoshi. So it's kind of, yeah. Anyway, we'll save that one for another day.
Yeah, I mean, the only thing I'd add is that there's plenty of people that are fighting cypherpunks that are out there fighting for privacy and trying to scale it and create true Bitcoin DeFi and all this stuff. So even if all this is true, it doesn't mean the pendulum can't swing back away from BlackRock and all the centralization that's happening at the moment, for sure.
Well, just like you see that, like once the tech gets out of the bag and everyone starts talking about central bank digital currencies, like the bastardization of the tech, that doesn't mean it can't go the other way as well. That once tech gets introduced, people can't use it for good. And that's why there's so many cypherpunks building and actually doing cool things with it that are freedom promoting tools.
Yeah.
We'll jump in. So obviously, as we spoke, we've had nearly a 37% drawdown from top to bottom. So we've had the little bounce now. So people have probably been able to breathe a little sigh of relief. But the biggest liquidation events in history, if you're going to go back till sort of the start of October, nearly $1 trillion wiped off the market. And then now we're starting to see that recovery. But just because of the nature of the size of Bitcoin now, the losses are significant when they do draw down. But I'd say a lot of people who are first timers now will be in awe about exactly how crypto moves and how it works. But for those who have been around for a while, we're just like, it's another Wednesday.
Yeah, exactly. Kind of to be expected when we really saw retail starting to flock in a few months back.
And so, like Bitcoin ETFs, like they obviously now seems to be the mover. They shedded quite hard. Now we've started to see a reversal here a little bit, where they started to see some inflows come back. So I don't think Larry Fink is sitting in his office thinking, "Oh no, now Bitcoin's drawn down. The 4-year cycle's over. Like I can't." He doesn't care. Like he's going to keep still trying to sell his product. And look, we know that liquidity is now starting to move and open up. Like seems like the US now is going to stop quantitative tightening. We're probably still getting a rate cut in the US, even if we don't here in Australia. But this was another one from the week that like it was almost like a coordinated attack at the same time that the rating agency was speculating that all of these DAT companies, the digital asset treasury companies, would not be allowed to be included in the S&P 500 if they don't have like an operational business or had reserves that was at least more than 50% of the underlying digital asset. And Saylor clapped back at this because he's like, I've got a software business, so you should include me. Because the reason why this is so catastrophic for him is that all of these auto buy, like retirement funds that are just auto buying stock would now no longer include this. And that then obviously really negatively affects his ability to keep levering against strategy to be able to buy more Bitcoin.
Yeah, and Master, they had a premium of 3 to 4 times their Bitcoin holdings, and it dropped to like 1.1. So, yeah, MicroStrategy, as you say, I think it's going to be affected. And this is also a case of the BlackRocks and that they just don't care about anyone else. They don't care if they liquidate Saylor and they become the only place, whereas he was one of the better places to maybe get exposure to Bitcoin and trade like an ETF ahead of the time. Now they're coming in to cut everybody's lunch.
Yep. And there's no real need to like, if you're using MicroStrategy as a proxy, that was the only way to get exposure before if you couldn't buy Bitcoin directly, but there's heaps of ways now. So if you're just trying to stay in TradFi and get exposure to Bitcoin, it's not only the only way now. And I did read a report as well that JP Morgan stopped allowing their traders to use MSTR as collateral, where they could use it as collateral for leveraging other purchases, and they stopped that, or they changed the ratio to like almost nothing. So again, just like seems like a bit of a coordinated attack against these DATs, but we have seen the rebound, and so now I think as time of recording we're about 92,000 if I check my thing, or 91,000. So we'll see what happens from here. I wouldn't be surprised if we now go run up and test the 100K level, but I don't think we're full bull mode again until we break that sort of 103 and get above sort of the bull market support band. So time will tell over the next week or so, but the rally has begun. If we melt down again below 87, then I would be going defensive, but I don't think the bull market is over. If the TLDR of this video is the bull market over, I don't think it is.
No, and markets are thinly traded. Well, everyone has time off from December through Christmas news and that sort of thing as well. So there can be volatility. But yeah, I kind of more expect it just to chop around. And if it's really thin, maybe they try and push it down one more time. But as you say, I think it's all still pretty bullish into next year.
Well, like I said, I've just gotten back from DevCon in South America. It was my first time to Argentina, or first time to South America. I was in Argentina. And this was really interesting, like to see sort of Vitalik. He's matured a little bit, I think, Vitalik. I've seen him several times now, and I think the first time I saw him live was in Dubai or Singapore, and he got up there and started singing Japanese anime song, like intro music songs, and I was like, oh man, my net worth is tied up in this dude. But he's actually quite thoughtful, and I really enjoyed his sort of keynote at DevCon because he effectively said that privacy is the new sort of direction where we go here, and that you can't have people knowing your full net worth by, you transferring some crypto. And I don't think that that this is unreasonable to think that privacy is now going to be like one of the major parts of blockchains. And so I love it that the ETH community is going to get around this. We all saw what Zcash had its moment. But if the underlying thing is the new use case for ETH is privacy. It was all privacy based. So I'm very excited to see what tools are based around that and where that goes.
Yeah, it's exactly what we just touched on. Seeing the problem, addressing it, and hopefully they can implement it reasonably soon. And I also remember seeing Vitalik and the crew dance at in the Sydney ETH conferences. Was it 2018 or 2019? Yeah, wild times.
Yeah, yeah. So he's such a character, that's for sure. The other one was the Monad mainnet did launch, and what a time to launch. It was like in the middle of the meltdown. So I think the Monad community was probably a little underwhelmed with like how it went, which is to be expected with the sentiment at the moment. It's probably launched at a 3 billion FTV, but there's only 10% of the supply circulating, so a couple of 100 million market cap. But you can see everyone's deployed on it, like Uniswap, Circle, even all like Phantom and Magic Eden. They've all sort of launched applications. So all the big boys have all deployed OpenSea. They've all deployed onto the Monad net. And I think this is significant because it's kind of like what Ethereum was promising in its early days, that it would be this parallelized EVM where you can have almost like a multi-lane speedy highway that still is an EVM-based environment. So there's plenty of fight about Monad where it fits in the scheme of things. Is this needed? But effectively, if you think like a juiced up Solana that's still EVM, that's effectively what Monad is. And so we'll track it. It's very smooth to use. Ironically, Solana's new platform, Sunrise, actually listed the token as well natively. So you can actually go buy the Mon token on Solana. So they're trying to, jump on the Monad hype bandwagon as well. So I will think that this will probably be here for the long term. And I'm having fun playing around with the chain and at a minimum. And let's see, what the token does in the short term. Obviously, high FTV, low float. There's still a lot of tokens to come onto the market. So buyer beware.
Yeah, I'm still so hesitant to touch any altcoins unless there's just a really, like you said, with that 90% overhang and all those things, I'm still so wary. Yeah.
As you should be. Polymarket again, raising more funds, and they've gotten approval from the CFTC. So it looks like this is going to become institutionalized. And so people are now seeing that this thing is like accurate. Like this predicted the US elections. This thing has predicted markets. And it's almost like the source of truth now is Polymarket. So the fact that they're becoming more institutionalized and now they've got actual CFTC approval to be an intermediary, like who knows where they go with this, but it seems like they've gotten the green tick from the regulator.
Yeah, that's going to be an interesting one to see if it comes corrupted or like, a bit of insider knowledge and they've got a lot of money to push these betting markets around and then swing them last minute and all that sort of thing. So I'll be fascinated to watch that play out.
Last one as well from me for this week is that, this other stablecoin launching on Paradigm. So this is Stripe's stablecoin. And so again, the big boys who are from the traditional finance space, they fought crypto for as long as they can, and now it's full-blown adoption. So I would not be disheartened at all if I was a blockchain investor, if I was, a trader and I was in this space or looking for adoption. I think we're at the point now where we are, we're mainstream. Like blockchain is now integrated in every level of the financial system throughout the US specifically. And this is only going to continue as we sort of roll out. More and more countries will adopt it. I think I saw an article this week as well that New Zealand has just included into the main curriculum inside schools.
Yeah.
And so we've arrived. Like this has happened. And so I would not be surprised at all if we don't have a 4-year cycle at all anymore, and that we just trade. It finds its own rhythm and it finds its own correlation. I saw that Bitcoin is 90% correlated to silver at the moment as opposed to gold.
Yeah.
So I would imagine as monetary policy changes over the coming months, I think that we'll have another leg. And so I'm still keeping my eyeballs glued to the market, that's for sure.
Yeah, and with that maturity comes a lot of pros and cons that like we cover, and we want to keep focusing more on privacy and decentralization, getting back to all the good juicy stuff. But that's it for today, guys. You can head over to nuggetsnews.com.au to sign up for the free newsletter, all our research or our high net worth services. And Michael, thanks. We'll speak to you again soon. Cheers, guys.